Good morning, everyone, and welcome to Tuesday morning. It's Stephen Whiteside here from the uptrend.com. Well, what do you know? We made it to the last trading day of 2024. There's nothing going on at 8:30 this morning. So what we're seeing in the pre-market this morning will probably end up being what happens at the open. We are trading above fair value, being led higher by the NASDAQ, which is up less than 0.5% in the pre-market on Tuesday morning. I kind of suspect today will be an inside day or a day of indecision for the market. We're really not going to find out what the market's intention is until next week. We'll be open, of course, Thursday and Friday, but a lot of people like myself will be taking time off. I really don't know what my schedule is for the rest of the week. We'll certainly be publishing charts, but I don't know about doing videos in the pre-market. Now, yesterday at this time, Boeing was in the news. It was in the news all day yesterday, even into last night's evening news. We certainly traded below the lower channel line, but we closed near the high of the day, so no change in trend for Boeing coming into Tuesday's trading action. Now, I posted a couple of charts just to keep track of how the market looked before and after the Christmas break. So back on December 20th, the iShares for the Russell 2000 had traded down to the lows from back in late October, and we were looking to see if those lows would hold. You'll often hear me say if the trend doesn't change today, then those channel lines are going to continue to move lower daily. And that's exactly what's been happening over the last 10 days, where the channel lines continue to move lower since the trend did not change. And you can see that the low that we made back on December 20th is still there. It is still holding us in check. So the trading range for over the Christmas break has been pretty narrow. It's been between the 218.75 level up to the 225 level. You can see that we traded and closed just above 225. So that is certainly a line in the sand. If we take that out, that'll be a very positive sign for the market. Of course, if we take out that low from December 20th, that would certainly be a bearish sign for the market and would tell us that we'll probably go back down to the 206.25 level. Neither of those things have happened just yet. Now, at the other end of the scale, of course, the world is still focused on those big cap tech stocks in the Magnificent 7 ETF. And back on December 20th, we traded through the lower channel line, but we did not close below it. And now yesterday, finally, we did close below it on the daily right side chart. I also mentioned that more conservative investors may want to give it a little more room. And we certainly did not close below the tether line on the midterm chart. So we are looking for a close below yesterday's low to give us a sell signal on this particular chart. So for short-term traders, we got a sell signal yesterday. When we go through the Magnificent 7, in our case, it's the Magnificent 8 group of stocks. Apple is still on a buy signal. That would change on Tuesday if we close below $250.45. Amazon's on a sell signal right now. That hasn't changed. Alphabet's looking for a close below $190.86 on Tuesday to give us a sell signal. No change in trend for Meta or Microsoft, making a new low for this move on Monday. Then NVIDIA, I think, was the only winner on the Dow yesterday, closed up slightly on the day, looking for a close on Tuesday below $133.73. Then Shopify on both sides of the border, still on a sell signal. And Tesla finally generated a sell signal as of Monday's close. Now, while we haven't seen major moves in the stock market over the past few days, the VIX has been rising. It is still on a sell signal, and that is mostly to do with the pre-Christmas volatility that we saw. But you can see here that we've been moving up over the past 3 trading days, and we certainly traded up to the upper channel line yesterday, did not close above it. So on Tuesday, we're looking for a close above 1909 for the VIX for the S&P 500, and there's a similar situation for the NASDAQ and for the Russell 2000 VIX, both trading up to the upper channel line on Monday. Now, looking at the 2X Canadian leveraged ETFs, starting off with the 2X bear for the TSX, we're still on a buy signal here, trying to get to $25, and that is certainly a reasonable target. If you look to the left, you'll see we were up at that level in October. Then we're not doing as well in the U.S. market. The bear ETF for the S&P 500, and we're still trying to get up to the 1641 level. That is certainly doable. There's a nice open gap there from late October that could be an issue. Looking at the bear ETF for the NASDAQ, we're trying to get to 1094. Is that doable? Certainly. We were there just back in November. Then looking at the bear ETF for the TSX energy sector, we are back on a sell signal as of Monday's close. We certainly had a nice run, had a lot of time to take money off the table, got all the way up to 28.13, so you should have a small position left. We do not have to roll into the bull ETF this morning. We are still on a sell signal here, looking for a close on Tuesday above $26.17. Then looking at the bear ETF for the gold sector, new high yesterday for this particular move. We are still have some room to run before we get to the highs from November. We did hit the 31.25 level again yesterday, looking for a move up to 34.38 if we can take out the high from November. Certainly, I don't think we're going to head in that direction on Tuesday as gold is up $5 or $6 in the pre-market. Now, we had a huge move in natural gas yesterday, and coming into this particular move in the market, we have been both right and wrong. Back on Friday, you can see our next target was 37.50, and there was a nice open gap up there. That was certainly a reasonable target to the upside. Then if we could take that out, we had the high from just above that open gap, and that we'd have to get through that to get to 43.75. So that was our playing field from last Friday. Now, what happened yesterday? Well, we hit a home run, which is not how the market works. The market is made up usually of singles and doubles, not a lot of home runs, but it's nice to be on the right side of one when it does happen. We were up over 28% yesterday, and we hit a bunch of price targets. We opened at 46.52. So if you had an order in at 37.50, it got filled at 46.52. If you had an order in at 43.75, it also got filled. And I should rephrase that. You don't necessarily get filled at that level, but your order gets executed up at that level. And you're next in line to sell. And I'm not sure exactly what price you would have gotten, but let's say it's around the 46.52 level. So if you had an order at 37.50, if you had an order in at 43.75, they both got filled at that level. What you probably didn't have was an order in up at $50 because you didn't see that level on the chart, and certainly looked like it was kind of impossible to get there. We'd have to punch through a lot of resistance. But whatever happened yesterday in the natural gas market took us all the way up to $50.28. So I wouldn't have had an order in up there at 50. If you did, congratulations. But we're pretty happy with the orders that were filled at the open at the 46.52 level. So congratulations who anybody who was long the bull ETF for natural gas. Let's finish off this morning's presentation looking at those big 3x U.S. leveraged ETFs, starting off with the S&P 500. We did trade below the lower channel line last week, but of course we weren't watching the market and didn't really care what happened last week. So here we are, we're along the bear and trying to get to 664. And of course, the S&P 500, the NASDAQ have both been holding up fairly well. And so we haven't had a rush of sellers in those particular indices. The NASDAQ bear ETF looks like this. We're trying to get to that open gap before we get to 37.50. So we're trying to get back over 31.25. We may not do that on Tuesday. Now, we're still long the bear ETF for the U.S. energy sector. That did not change. We're still long the bear ETF for small caps. That has not changed. Trying to get to 1406. That's certainly a reasonable target when you look back to see where we were in October. Then being long the bear ETF for biotechs is still working. We're trying to get to 781. We almost got there before Christmas. Then looking at the financials. Now, the financials in the U.S. market is different than the Canadian market. It is certainly more heavily traded. So this is the bull ETF for financials. Here's the bear ETF for financials. Now, there's a big open gap over here, and we've traded up into it. We certainly haven't filled it. So filling that gap would certainly be a reasonable target to the upside. Now, looking at the gold market for the gold miners, you can see the bull ETF is making a new low right now, while the bear ETF is making a new high. and we're trying to get to the 75 level. We're still trading at the 68.75 level. If we can take out yesterday's high, then $75 would certainly be a reasonable target. We did get as high as $70.76, so we have been able to trade over 70, even though it's a big round number. We have been slightly above it. We're looking to see if we can break away from this level to head towards $75. Okay, folks, that's all I wanted to cover in this morning's presentation. It's the last trading day of the year. Should be an inside day. Should be a fairly quiet day with no major economic numbers coming out this morning. I don't know when I'm going to be back up. I haven't been given my personal schedule for the rest of the week. We'll certainly be posting charts tonight and Thursday and Friday. Of course, on Friday, we'll do a complete weekend update. So, wishing you and your family a happy new year, all the best in 2025. And I will certainly be back on the weekend to do a weekend update. That is certainly guaranteed. But the next time I do a daily update is yet to be determined.
Thanks for tuning in until the very end of today's stock market timing educational video. If you found the content valuable, don't forget to express your support by hitting the like button, leave a comment, sharing with your friends, and subscribing to our channel for more insightful updates. Remember, in the world of stocks, timing is crucial, and following the trend can be your greatest ally. If you would like more information on how we can help you better time the stock market, please visit theuptrend.com.